Hey guys, Sam here. So I had a request to take a look at a particular coin. This is OMiseGo, traded against Bitcoin, and this is on Bittrex, which is an exchange that is very popular. It's a U.S. exchange. I trade on it. I happen to be long this coin in on this exchange. So I had posted this trade a couple of days ago for a long position off the 50, and I was just checking it and revisiting, and I saw something that I thought might be useful to you guys that perhaps you hadn't seen before, and it's consistent with this idea of building a case for either your first entry or a place to add, or just kind of building that case around a pivot and looking for a confluence of relationships between swings to give us some confidence that we might have a pivot we can work from. So so now this is OMiseGo against Bitcoin, so we don't have a lot of data here. Again, the approach is always the same, always the same. We're looking for relationships between these swings. So, of course, the first thing I would do is grab the fib tool, and I'd go down to the lowest low that I can find and start drawing up and see how we look on the way up. So even just right there, that first little pull, you can see it goes right to the 618, and then we rip to the 23 all the way to the 100%. But if I take it up to that next high, you can see that this is looking promising. Right down to the 50, we go to the 23, a little reaction, there's some profit taking, we get to and through the 618 before we start the sell-off. Now just continuing, because I know I've got a good pivot that I can work from. Now you can start to see this. Well, okay, so I mean, it just doesn't get any better than that. I mean, right to the 50, it's front run by a few ticks. Off we go. There's a retrace here, and then finally they get their target. There's the negative 23, right? And then actually we bounce and then rip through it actually, and we're not too far from the negative 618, but we haven't been there yet, which tells me potentially there's more upside. So now we got to sort of find what kind of swings they're working from. So if I continue to pull here and look there, well, that's interesting because now I'm working from this high. I've gone to the 38, and now we've hit the 23 almost to the dollar. And there we see the big reaction. So potentially, they're still working off of this low. Potentially, because we saw this low had a good reaction, we can look here and see, well, what do we have anything we can deduce from this? Is that potentially a low that algos are pulling from? Well, we get through the 618 by a few ticks. Look here, we get this. Here's the prior resistance offering us a little bit of support. That's likely stop running. You've just got wicks, bodies hold it. We come back up, we're down, we retest it a second time. Very often, if a low is going to hold, it's tested a second time, and it's that second test holding that gives you confidence in it. So then we're off to the races, and then here we get a few dollars short of it. We get a reaction. So, at this point, I would look here. Right, we know that's good. I'd still continue to pull all the way, looking for an all the way halfway back. We're coming up here, so this is reasonable. We've got the 38 and the 200 period, but I'd also want to pull from this low. That was the one that hit it just perfectly. So we're coming into a potential move here, 50 and the 200 overlapping. So nice. And I'm kind of revisiting these swings to see how much confidence I can find there. And this looks promising. This looks promising. So I had this trade up the other day from this low, right? So we've got a couple of lows that we're working from here. And we can start to see the first entry was here. I am long from right there at 250. Right. So now the question is, do I just want to be out, or am I potentially in an area here where there's an opportunity to add? This is a judgment call, and again, it's back to your risk profile and the account size and what you can afford to work with here. So, I'm just kind of showing you what may be developing here. For me, this is an ad. For someone who's not in this coin, this could be a great spot to look to get long the market. So clearly, we've got this confluence here of the 618 from this swing, low to high. with the 50 from this prior swing that showed itself to be valuable in that algos were likely working with it. And we're coming into this nice little zone here right at the 200 period. Now, here's the other little nuance that I thought I would show you. Now, you guys are used to the this tool here. I call it the alternate price projection. And typically, you're going to use it in this fashion. We get a movement, we get a retrace, and then we're projecting up to some sort of relationship based on the length of this swing projected from the low here. It's also known as an external projection because we've now gone. This is actually a good point. So whenever you're retracing within a prior wave, it's internal as long as it stays within that wave structure, or within that, let's call it that swing. So if we retrace down and we stay within that, that's an internal retracement. Once we go beyond it, now we're in an external relationship. We're still looking for fib relationships and relationships that are that have proven to be reliable over time at the 100%. The 1.272, the 1.618, those are all relationships that we know have proven reliable over time. We know that algorithms are using them, so we want to pay attention to them. So this is the most common way that this tool is used. But remember, I'm going to propose to you that fibs are swings are always moving in relationship to one another. So another thing in this puzzle that we deal with in terms of trying to find the important swings and where we can build confluence of data, I would use the alternate price here because often you'll see swings move in very precise relationship to one another. So now all I'm doing is I'm projecting this swing distance here from this high. And look what lines up here. So we now have we have four technical components offering us potential for a buy right here. So if I get my little, so here is a very precise buy zone with just a beautiful confluence of data. Now, of course, we'd want to look for the swing relationship from this most recent pivot. We get up, we don't get to the 50. We get a few ticks through the 3.8, but now look where the 23 is. Now we have 5 fib relationships overlapping all right at that point where we happen to intersect with the 200 period. Does that guarantee that that's the low that's going to hold? Well, of course not. Of course not. But we have strong evidence here that this is a potential buy zone. One thing I can promise you is a reaction. That we're going to get a reaction there. So it's an opportunity to potentially get long here with a relatively tight stop, because if we're wrong and it blows through it, we don't need to take a lot of risk because we're trying to be very, very precise with our entry. We can also look, if I just take the cursor and I look over here, we've got this prior swing high here that's likely to offer some support. We've actually got a little zone here that we could look at if we draw that over. So we've got a lot of data. We come down to this prior high. So we've got a lot of evidence to support this as a buy zone at the very least. At the very least, that's a buy zone. I'm going to take this off just so that we don't get too clustered. Now, let's bring the oscillators in. Do we have the energy there? Do we have the energy potential? Right? Well, since everything's selling off today, we know these are going to be pinned down towards the bottom end of the range. So we're just coming to the 30 potential there if this starts to turn for this to move all the way back up. So if we put a risk reward scenario on this, here are our upside targets because we have this great confluence of data here all projecting up. So if we put a trade profile on this, we've got the potential, and we're going to be tight with our stop. I might look to the 65. That's almost 11 to 1. Even if I pull this down a little bit, there's 10 to 1. 10 to 1 risk reward. So is that a trade you want to consider? Well, for me, that's a no-brainer. I will take that trade every time, knowing that on the way up we're going to hit some resistance. It's not going to go straight up, but we have that kind of potential. And if we do pivot here and we start to turn, there will be opportunities to add, because now we have a good pivot from which to work, and we can look for the kind of relationships and impulsive nature that we might expect if the market does pivot and turn here. If you want to be safe about it, you can wait and watch for the reaction. I can promise you a reaction. If we get evidence of support holding, we get a little swing high, maybe on a smaller time frame, we look for this to move, then we look for the first higher low. Right? And then you might have to move this up a little bit if you're waiting for that. If you're waiting for that evidence that we get a higher low, then we can enter knowing that the stop is below this little confluence area, and we still maintain a 10 to 1 risk reward. Great looking setup. But again, there's no guarantee. The only thing I can almost guarantee you is that we're going to get a reaction here. As to whether or not that's the pivot low, that remains to be seen. But we certainly have strong evidence to build the case for a trade there. Okay, guys, back to you later.